What's up guys, welcome back to a weekly trading reflection. It's week 17 and I got some new lessons I learned this week. So as you can see, we're going to go over all of them as usual and then we're going to apply them on my trades I took. So I'm super excited. I learned a ton again. I'm just keep on learning, keep on getting experience. And so yeah, let's just get right into it. First of all, what I got right here is wait for it to be dumb clear. Wait for it to be dumb clear. Why I say this? It should be so clear. Everything should align. It should be so clear that you take the trade. Otherwise, if you're not going to take the trade, it should be dumb. That's the most important thing I learned from this week. It should be so dumb clear that you should take the trade. And so whenever you're looking at the charts, you don't want to just take every opportunity you want. It should be dumb clear that this is the only trade you're going to take today because everything aligns. Next up, your stop is your invalidation. I had a lot of bad trades this week just because of this big lesson, which I already know. I know that my stop loss should be my invalidation. So it means that, let's say we have a point of interest right here and I'm looking for a sell model, right? So what I look for is then some kind of manipulation right here in this POI in premium if we're bearish on the higher time frame, and I want to look for a break of structure, market structure shift, displacement, whatever, to then target the lows. But I took some trades this week where I didn't follow this rule. Your stop loss should be your invalidation. And for this trade, for example, if we are entering right here, let's say my stop loss should be right here. Why? Because this is the last manipulation inside the high time frame PD array. So this should be the protected high, not this one. I put my stop a lot of the times at this high just because I wanted a bigger RR and yeah, I just want to make more money, right? But that's not the case. This is not your invalidation because price can easily just go above this high again and then still validate this bias. So yeah, your stop loss is your invalidation, meaning your stop loss is where whenever that's get hit, your trade is invalid. And so this is not the case, right? We can still have some internal sweeps before going lower. So next, I learned more with minis. Okay, so I had a big L on Monday where I just spiraled into losses. I'm gonna show you that in a bit on my trades. But basically, I learned this week that after I had that big loss and started using minis, so lower size, only like 50, 100 bucks on my challenge on my Topstep Combine, everything just goes so much easier. I can look for more accurate setups. I can follow my rules better just because I trade lower size. And you see a lot of people talking about this, right? Whenever you go low size, you're more focused. You're gonna not take dumb trades because you don't care a lot more about the money, right? So from this week, I just really focused my shift on just not passing the combine, but really focusing on those habits, on the decisions I make, because that's what will get me that outcome, right? So that's with the next thing I'm going to talk about. Decisions is more important than outcome. If you're focused on passing the Finite account, you're going to blow it because you're going to focus on just taking every opportunity you see, and that should not be the goal. Your goal should be to take good decisions. You should manage your risk, of course, all of that stuff that everyone talks about, but your decisions is way more important than your outcome, right? Then next up is Monday is dangerous. What I mean by this is if you have the weekend, right? So right now we have Saturday, Sunday, and we just itching to go back into the markets, right? I'm super excited to go back into the markets and learn new things again, have some good setups, have some bad things, and then learn about these things. But the problem is about Mondays is not only is Monday just a bad day for trading, as many people say, and as it is, but it also just is dangerous because you are waiting the whole weekend to just start trading again. And so when you're back on Monday, you're just excited and you want to take every opportunity you see. So that's why I say Monday is dangerous and you should really preserve your risk, because I mean, I made this mistake. I lost 1K on my challenge account just because I was just excited to take a trade on Monday, and I should really wait for Monday to set us up for the week. And yeah, just really be patient, and most importantly, just not trade on Mondays if it's especially no news Monday, right? So the next thing is actually a very exciting thing I learned about this week. It's about canceled SMTs. So right here, what I mean with this is basically I used to just draw out every SMT I saw. So whenever we have a bullish SMT, right? So NQ made a lower low, but ES not, or the other way around. And then we have another SMT, but it's at the top, it's at the highs. Well, usually I would just leave those both SMTs on my charts. I wouldn't delete any of them. But what I learned this week, what some of my mentors also confirmed, and just what actually is obvious, is to delete and basically cancel the previous SMT if a new SMT is formed. So meaning, let's say we have an SMT right here, and then we have an SMT right here. So let's see, this is an SMT. Yes, like that. This is the previous SMT. This is the current SMT. So whenever we have a bearish SMT, we're gonna delete this one because this is not relevant anymore. This is what I learned, and it's actually, it makes sense. And I mean, I'm not talking about if this is just a very, very small SMT. It also really depends on whether this is a big SMT on the higher time frame, and yeah, it just takes up more candles to form, right? But in general, when you have an SMT on the other side, on the same time frame, let's say, you should delete and cancel the first one. The other way around too. If this is an SMT and we end up again creating another SMT at the lows, then this can be deleted and we use this one, right? So yeah, something I learned. Maybe you guys have some aha moment, because it was for me. But next up, the model needs confirmation. What I mean with this is, let's say we are, because you know guys, I trade a lot of market maker models. It's basically how I trade, together with quarterly theory and just price action, SMC. But what I mean with the model needs confirmation is, let's say again we have a high time frame PD array, we are bearish, we want to look for shorts. Right now, oh sorry, this is not a good example. Let me just create a nice path like this. We have the sell side of the curve, the buy side of the curve. We have the PD array, manipulation, break of structure, displacement. And now this is not still a confirmation of whether this is gonna be the buy side of the curve and we're gonna go lower. No, model needs confirmation. I mean with this is that we should at least, with this low, displace 50% or 40% within the range, right? Because then, if we then respect a PD array right here, this model is confirmed, right? We can look for sells upon every reaccumulation, displacement. This is what I mean with the model needs confirmation. This can just be a stop rate, an internal stop rate before going higher. So that's what I mean with model needs confirmation. Really important. You want to see price at least after the manipulation go back 50-40% into the range, and then we can have a valid we can be very confident about what the draw is, which is the original consolidation of the buy or sell model, right? So don't be too zoomed in. Just a small lesson. Always zoom out, look for the high time frame PD arrays. Don't be like too zoomed in with the liquidity pools. It should be really, really clear and obvious. That's when you have the best setups, right? Everything needs to align. Then this is I keep saying this is the most important thing, but it really is actually. What has to happen first is so important, because I used to just look at the charts and just, yeah, I know my trading system, I know my trading plan, I know my rules, but I would just stare at the charts with not actually saying anything to myself or having some things I need to see first. So that's what I mean with this. What has to happen first is so important. Whenever you're looking at the charts, this just helped me so much this week. I just ask myself, what do I need to look first? What do I need to see first? Sorry. What do I need to see first? For example, I need to see PD array and liquidity pool getting swept. I need to see displacement. I need to see a retrace, and then I can only take a trade, because then you're going to cut out those losses where you just take a trade based off of intuition, or just take a trade without actually following your rules, right? So you should have your trading plan. That's the first step. But if you're just having that next to you and just taking trades randomly, knowing that, okay, maybe I follow my trading system, that's not the way to go. So what I learned is always go through your trading plan and just ask yourself, what do I need to see first before entering a trade? So Then next up, always wait for discount and premium. This makes sense. I had some bad trades because I would just enter on a really zoomed in discount, but actually on the higher time frame we were still in really overextended, so I should wait for price at least to go to discount. I need to have that patience, otherwise I'm gonna take some dumb setups, right? Now the next thing is CISD, displacement is needed. This means change in the state of delivery. So it means when are we going to start to go to the other way, right? If we taken out sell side, we're going to go to buy side, and it happens like the change in sell side or buy side, it happens in the CISD, and we need displacement. Displacement is so important. I took a trade this week where everything aligned, but there was no displacement. And so this is a very, very important thing. It kind of aligns with what has to happen first. If I don't see displacement, a clear bearish PD race getting disrespected, if I'm bullish, then like I'm not gonna take the trade. I need to see this first before taking any setups. Now the next thing is context is everything. If you have a lot of SMTs or PD rays that you use, but the context is not there, then you should not take the trade. You need to be a good trader in terms of context, not in terms of, oh, I see a fair value gap, whatever, displacement. It all doesn't make any sense. It's not relevant unless the context is there. So meaning we have a buy model, time and price aligns. Everything is basically about context. You need to have a high time frame bias, otherwise you're just gambling because you don't know which fair value gap to hold. And when you have context, you know exactly most likely what is going to happen with the things you indicate on your chart. Then next up, the time frame sync is very important. Whenever I'm trading the 90-minute cycles for quarterly theory, for example, I learned that I need to use a 1 hour PD array. Like previously I used like 4-hour PD arrays and maybe daily PD arrays, but I really need to use the time frame sync. Also, if I'm looking at the 1 minute chart, I can use the microcycles. Like I can't use the 5-minute chart for microcycles. I really need to use a 1 minute chart, and then for the PD array in the 1 minute, I need to have a 50-minute PD array, right? So just an important thing, you should be basing your PD arrays and your entry time frame like it should be static. That's the best thing, and you can set some rules for that, so it's much more easy to look for setups. So the next thing is recognize pair strength. I took a bad trade this week, I think because of this, because I was not looking at, oh, did ES take out this high, or is ES much weaker or stronger compared to NQ? And so this is actually very, very important, because this can indicate SMT, change in the state of deliveries, or just when you need to trade this pair instead of that pair, because that pair is weaker or stronger. So that's an important thing to keep in mind for next week. Just really see which one of the pairs I trade is weaker or stronger. Then the almost last thing is PA doesn't lie. Recognize the model. Let me think about what I meant with this. Yeah, I remember. So I wrote this down this week because I took some trades knowing that the price action is not in my favor anymore, but I still want to hold it because, I was attached to my bias and I just want to make profits, right? Just like everyone wants. So this is a very important thing. Whenever you're in a trade or whenever you're about to take a trade and you see some things, saying to yourself, but this doesn't look nice. And okay, the small things doesn't really matter, but if there's like a really important thing that you can't neglect and you still take a trade and the opposing bias, then you should really just close the trade immediately, because you should always listen to the price action. If it's really giving you a sign like, yeah, it's just not a good time to trade because we have low resistance liquidity to the bottom, but you want to take longs, it's just not good. PA doesn't lie. And so I got stopped out, I think one time this week. Because of this, I just refuse to listen to the price action, but I should always recognize the model and just trust the price action, right? Last thing is just a keynote. Again, every week I need to remember myself that time comes first, then price. Time is so much more important than price. I realized the last couple of weeks, months, is just the only thing that is important. For example, I am not gonna take any trades during New York session whenever we are inside that accumulation of the 90-minute cycles. And I am gonna take trades during the manipulation or distribution because that offers high probability, a high probability environment, right? So we are done with these lessons. Now let's go over all my trades this week, and yeah, let's just go over them, right? So let's go to NQ. I have the list right here. We're gonna start with Monday. This trade on Monday, I was just having a bearish bias, and so this was Monday, so it was a classic buy day. So I had the wrong bias. I had the bearish bias just because I was looking at the weekly fair value gap to fill after we were so extended on the higher time frame. So I was expecting, yeah, we're just gonna sell off and create this market maker sell model on the higher time frame, but I was not listening to the price action because this was actually just a clear buy day. I mean, I can have this draw on liquidity, but if I see during the session signs that it's not gonna happen, then I should listen to the price action, right? So this was not the wrong draw on liquidity. The draw on liquidity was buy side, so it was a buy day. And let's look at what I did. So this was also a draw on liquidity, equal lows, and basically I was trading around here. Let's go to the 1 minute time frame. We had some SMTs. Let's take a look. We had some SMTs right here, so I was looking for shorts, and especially because we have all these lows being built up right there. So we had an accumulation going into New York session, and then yeah, I just wanted to target the lows because I was bearish. But the mistake I made is that I was using the wrong stop loss, right? Whenever we have manipulation inside a high time frame PD array, this should be my stop loss, right? And if it's not a good risk to reward, don't take it, right? So I was forcing this just because I wanted a good risk to reward, but this can easily get taken out before going down because this is the protected high. If we have a manipulation SMT right here inside a PD array, this is the protected high. So that's my fault, and then I just spiraled into losses. I lost a lot, I think 1K on my combine. So I was back at break even on my challenge on Topstep. And I took just some bad trades because I was having that bearish bias. But little did I know that we were actually just really bullish, because look at, we had an SMT right here, and remember, if I have an SMT right here, SMTs right there, I can delete these ones because these ones become irrelevant. And on the higher time frame, I was not seeing what is actually happening. And what happened is we take out this equal lows inside, we tap inside this hour one fair value gap. And when we were ready, when everything started to align, so remember, it should be so obvious, that's when you should take a trade. It should be so damn clear. And whenever I just spiraled into losses right here, I lost a lot. I just breached my daily drawdown. I mean, I can still trade, but I couldn't trade for the day anymore. And then after that, the real setup presented itself. This was so obvious. I mean, just look at this. If you just don't delete these ones, these were all bad setups because wrong stop loss, just forced, not dumb clear like you want it to be. But after this, we went below the true day open, below the true micro session open. We took out these equal lows inside the discount of this range, tapping this hour one fair value gap, building up a lot of low resistance liquidity right here. We can delete this one because we have an SMT right there. Then we were just ready, right? We were ready whenever we have that change in the state of delivery, meaning we disrespect this fair value gap, we break structure right there. Just an entry on the fair value gap, and you can target all this liquidity that's being built up on the choppy AM session, right? So yeah, this is just a wrong bias and wrong stops, not a good invalidation for my trades. And yeah, whenever you don't have good risk management, you're gonna get chopped up really bad. And then whenever you're just done for the day, this is when the real setup presents itself. I think this was in the last quarter. So yeah, be patient. The setup should be dumb clear, and don't force any opportunities. So that was Monday. Let's go to Tuesday. Missed trade. Just gonna go quickly over it. This was a missed trade because we were really bullish on the higher time frame, so I expected us to come at least towards the equilibrium of this range. So I was bearish, and let's see what happened. This was in London session. We swept this high right here, tapped some PDRAs right there, I think some order blocks. We go down again, we disrespect these fair value gaps, then we go up again. Again, we are in premium. So I was looking for shorts. What do we got right there? SMT. Okay. Displacement, market structure shift. Let's just delete this because it's not really relevant. But we tap inside this order block above the true day open, after this SMT, after this displacement, after we've come back to equilibrium of this range. And so this was just really clear for the fact that we also had some lows being built up right there. So confluences for this was trade it back inside premium, have an SMT, have a clear draw on liquidity, tap this order block above the true day open, above the true open, also a little bit above the true day open, but displacement, and then we tap above this, then we're ready, and yeah, we can just market enter right there. This was a missed trade, but yeah, just want to show you guys how I trade and why this was, in my opinion, a good setup, right? So then we had a Tuesday loss. Let's see what happened. I was bullish because I said this, I wanted to price to go back to equilibrium of this range, and when we were at equilibrium inside these fair value gaps, I was looking for longs, but I was forcing my bias without listening to the price action. So this is a mistake I made. If you go back to those lessons, I didn't wait for a valid change in the state of delivery. I didn't wait for a valid displacement. So everything looked good. We had so much SMTs. We had low resistance liquidity. We were tapping inside high time frame fair value gap in the discount, but I didn't wait for a displacement. So I entered right there, I think somewhere right there, hoping that this was the displacement, but we were still respecting this premium of this range. So whenever we had a displacement, this should have been a good setup, but we hadn't. So remember what needs to happen first. I need to see a displacement after everything, and then I can only take a trade, right? So everything looked good, just one thing missing, and it can cost you a loss, right? It's stop rates, SMT, everything was looking good, but you need to have everything aligned, and especially displacement. Displacement is the most important thing. So after that, this should have been actually the good setups. You see, missed. This was when we were actually ready. So you can have made a market maker sell model from this, but I was just looking at longs, that I didn't see this short. So you will see a lot that when you have a strong bias, you will just not look at the opposing confluences that can actually give you a good setup in the other ray, right? In the other bias. So looking at all these stacked lows, looking at a sweep right there, displacement, this could have been an entry, your first low risk entry, but then when we respected this, yeah, then we have another displacement, and then we're just ready, right? So this is a missed trade from me. Let's just delete all of this, and then I think, let me just do it like this, yeah. This was on Tuesday still. This was a loss, a really small one, because remember last day I was just having a big loss spiral. So now I decided to trade with really low size. So we had this buy model, which I missed. We swapped this liquidity, SMT, a lot of nice highs to be targeted inside the premium. I mean, we were just expecting price to go here in premium before going lower, right? So the problem here is, remember what I wrote down in my lessons, is that I always need to wait before, I always need to wait for price to hit discount if I'm long, and not force any zoomed in discount, right? If we take a look at this, yeah, maybe this is a discount, but it's really zoomed in, especially on the 1 minute time frame. This should be your range, right? And I should wait for price to go back inside the range, almost tapping, favorably tapping the 0.5 before taking any setups, right? And so yes, this buy side liquidity from this buy model was not yet taken out. So I was looking for longs, but this was just a bad setup. I wanted to enter after we tapped this fair value gap and then had some little displacement. This is not a displacement now looking back at it. But yeah, I should wait for price to go back to equilibrium of this range, which is here. And then you see price is here. We displace here, disrespect this fair value gap. Okay, now we are ready. And this was the good trade I took, right? This on the fair value gap right there. Really close stop, really a little bit forcing my stop, but still it was a good trade. Took most of my contracts off at the low hanging fruit, at the low hanging fruit right there. So good trade. First one was not good. So yeah, the biggest lesson from this is wait for a discount and a clear displacement. Then we're gonna go to Wednesday missed trade. Let's see. Wednesday missed trades. Yeah, so I was looking for longs, I think, Wednesday, because we swept the sell side. We were inside this, I don't know, 1 hour fair value gap. So I was looking for longs, but again, I was not looking at the price action, and the price action doesn't lie. Basically what we were doing is we had a very clear market maker sell model, right? I was looking for longs here because we had an SMT here inside the hour one fair value gap, but the model, the context is the most important thing. And whenever we are just going back to premium, have a nice, really nice sweep manipulation, we go back, remember, at least 40-50% back into the range. Somewhere right here is where we really can confirm that this is the next trial on liquidity, right? And so I was looking for longs right here, but I missed this trade. What happened here is we had a minute 15. Let's see. This is a breaker, right? This is the last down close candle before a big move up, and we broke it, so it turns into a breaker. So that's the top line right there. And then we had the true micro session open. So we tap above the true micro session open inside this breaker when we had this market maker sell model confirmed inside the premium of this little range. And so then if the candle closes right there, it could be an entry, or at the fair value gap right here, it doesn't matter, but all just valid trades. So then we're gonna go over Wednesday win. Let's see, this was a really nice trade I took. What happened is we were tapping inside a high time frame period array, so I think fair value gap. We had an SMT. I was waiting for price to go just back into the premium because we were bearish. I was just expecting we go down, premium, that's how the market moves, right? So this is the premium, and yes, price may have tapped it right there, the premium, but I was just waiting for, okay, are we gonna start the sell model right here, or are we just gonna build up another sell side liquidity here like we did here and here and here before then actually having our smart money reversal? And that's what I anticipated. I anticipated another, I mean, when price was showing me this, I know that, okay, this was just another low for later to be taken out, and now we can target this high or just these highs, which I did, right? So we had a low right here, displacement, disrespect of this fair value gap, below the true micro session open inside the premium. Let's see if we have a confirmation on the micro cycles. So a really clear one. We have an accumulation right there, manipulation, this should be the distribution, and then the reversal or continuation, which is beautifully presented right there. So I took a long on this fair value gap after I saw that we had a change in a state of delivery right there, targeting some clean highs. And yeah, this was a good trade. Let's see what I wrote down right here. It was counter trend, yeah, but I expected more sell side generation to go to the equilibrium of the previous range and then have our market structure shift, right? So let's take a look at the Wednesday missed FOMC move. Okay, so this was FOMC. It was really interesting because I haven't really traded really focused as FOMC. So what I learned about this day is that usually on FOMC, the first 10, 15, 20, maybe 25, 30 minutes is going to be a manipulation, and then of course, after that, we're gonna have our real move. So going into FOMC, it was here, I think it was at 2 p.m. Yeah, 2 p.m. somewhere right here. We opened FOMC, we displaced down, so we could expect, okay, maybe this is just the manipulation before the real move, right? We're just gonna go to discount of this leg, and then we're gonna have some nice long opportunities, right? So looking at the higher time frame on ES, actually, not on NQ, let's see on ES, on the higher time frame, this was when FOMC happened. We had a lot of lows right there, right? We had a lot of lows on ES, so I was expecting, I mean, in hindsight, this was the draw on liquidity, right? Because we were right here at FOMC, and so basically what happened in FOMC is we had a move, let's see, where is this? We had a move up inside fair value gap, which was the manipulation of the FOMC, and then we cleared all this liquidity. So it makes sense, we were bullish on the higher time frame, so this was the move of FOMC. If we zoom out, it makes sense, right? But on the lower time frame, this is what it was looking like. We had the first manipulation downwards. This is the first manipulation. Okay, we have an SMT in 2 quarters, so it's a really good SMT because it's a big one, right? Another SMT right there. Then we have our market structure shift. This could have been your entry with your take profit at the highs. But why was this a good entry? Well, it was a good entry because FOMC is most likely doing a manipulation if it just starts. So we could anticipate longs right here because this was the first move of FOMC. Then we had an SMT. We were inside the discount of this range. If we do it like this, right, inside discount, we have a displacement. We have a nice fair value gap presented to us, and we are below the true open, below the true micro session open, below the true day open. And so looking at the true micro session, micro sessions, we had an X, A, M, D, right? This is what I talked about if you watch my previous videos. This is maybe looking like an accumulation, but this is actually also looking like a continuation of the previous, right? So this is a X, A, M, SMT formed, low swept on ES, and then D, right? So we have everything aligned that this could have been a good long setup. And so, yeah, in hindsight, of course, but this just builds so much confidence in your setups, right? If you just go back to the price action and just see where you could have profited from. Okay, so then this was still the manipulation. I'm not gonna lie, I thought we were just gonna go up afterwards because we had our manipulation and then our distribution. But it makes sense because remember on ES, we were just going with this move, with this whole move, we were just going back into a fair value gap. But with NQ, we swept this high, right? We swept this high. We made a big SMT right there. And so after that, you could have known we're going to go down, especially because we had an SMT right there. And looking just at the strength of the pairs, you see that after this big move, it just looks like a manipulation, right? We should respect this fair value gap if we want to go higher, but we were just hovering around. And after you see this big displacement, you know, okay, NQ is not strong anymore. It doesn't have a lot of strength because we have an SMT. We're above the true day open, above all of this true micro session open, true open. So that means that, okay, if we are here, is looking nice for shorts if you have the confirmations, right? So whenever you see the displacement, you can target the lows again, especially because it made so much sense on the higher time frame on ES to go and sweep all the lows, right? So really clean read on FOMC. We had the initial move down on the beginning of FOMC. Then when Powell began to speak, we have our manipulation, doing a big SMT, filling a fair value gap, high time fair value gap on ES, sweeping some highs on NQ. And notice whenever we break structure with this high right there, we don't hold it really good, right? We're immediately going back inside the range and just reading price action, this just can give you a sign from, okay, we're not really strong, especially because ES didn't even take out this high, right? Above a 3-day open, above true micro session open, above true open, everything started to align. Especially we have all these lows also here being built up. So this could have changed to a low resistance liquidity if we have this SMT, right? We can cancel these SMTs if we have this SMT, this big SMT especially. So yeah, this was there on liquidity. Really nice trade. So yeah, I forgot to say that with this trade also we had a minute 15 fair value gap, right? So that's why this was, in my opinion, a better trade than this one, because this is a little bit more advanced, because you really had to look at, okay, what's the narrative on the higher time frame? We need to go down on ES, so this was a good trade because of that, right? So that was FOMC. Let's look at Thursday win. This is where I started to have a lot of small wins. Unfortunately, my size was very low, which is actually good because now I'm just focusing on taking good setups, taking good decisions. But yeah, I could have passed my account already if I just do normal size, just some normal risk. But this was just literally risking $50 per trade. But let's just go over it because it's much more important to just build experience with what you see in the markets, because I mean, repetition beats luck. And yeah, this is just a skill you're gonna have for your whole life. So what do we got right here? A clean market maker buy model. We were inside the discount right there. A lot of highs being built up right there. So this was my final target. We have a minute 15 fair value gap where we have a stop rate in. This is the start of the minute 15 fair value gap. So sweep, stop rate, change in the state of delivery because we disrespect this order block. We are getting back inside this range. And so we haven't taken out this high yet. And that means that, okay, I can still look for longs because this is the target of the whole buy model, right? And so whenever I saw that we were tapping back below the true micro session open, below the true day open, inside the premium of this leg, and we tapped from this minute 15 fair value gap, this zone below true micro session open, below true day open, above the minute 15 fair value gap is where we can look for some good trades, right? And this is what happened. I saw that we were getting a displacement from here. This was my target, so I just market entered right there on the 1 minute, targeting this high because it was a good risk to reward. Yeah, my stop loss might have been here, but this is not a good trade, so I expected some good price delivery, so I put my stop loss right there. This was on the 1 minute time frame, and on the 15-second this was actually an even more beautiful buy model, because then there was a nice fair value gap where we can get tapped into. So what I'm gonna do moving forward is, I got trade await right there, I got it downloaded, and there I can just use the 15-second time frame because you don't have to pay for it there, and then I can only use it for like having those really nice fair value gap entries if my trading view analysis is already there, right? So again, models inside models, we have a market maker buy model on the 1 minute, and then we have a market maker buy model on the 15-second right there. So everything aligns. Models inside models is what's gonna give you the best understanding on how markets move. And so this was a really good trade. I'm super happy that I'm making improvements from last week, because last week I would just hold this towards the moon. I would just literally hold this until, yeah, I was just happy with the profits. But now I'm really happy that I took it off at the low hanging fruit for good profit. 2.16 hour, that's all I need. And so yeah, a good trade on Thursday. Then on Friday I also had a win on NFP. Like a lot of people, they say NFP is not tradable, you should not trade on NFP. My vision on this is, yeah, maybe, but I'm gonna test it out for myself first, and then after I have enough data, after I've traded at least 5, 6, maybe 10 NFPs, then I can say, okay, is it good to trade NFP with my approach in the markets, with my trading system? But for now, I'm just gonna trade everything. I don't care. I'm gonna trade every news every day, because I'm just focused now on building experience. And then afterwards, I can filter out the days where I would see, okay, this maybe this day I should avoid. But now I'm just trading everything, getting experience, and then I can make decisions later on, right? So this was actually Friday NFP, but it was a really clear setup actually. We had this move on Thursday, a really big expansion move, and then of course what can happen? In my opinion, if we go up, we must come down at least to equilibrium if we are bullish. So that's what I was expecting. We tapped inside this minute 15 fair value gap. We had an SMT, everything looked good for longs, displacement right there. Okay, this can be your target for longs, but it didn't got taken out yet. So because this was a target for the buy model right there, if we really have our smart money reversal, which we had, if we were displacing back at least 40-50% back into the range, I was confident if we were bullish, this is going to be the next draw on liquidity. So what happened? We made this big displacement. We opened up an hourly fair value gap right here, starting right there. We sweep the low inside the hour on fair value gap. We displace through this fair value gap, making a BPR, a balanced price range. Then I just marked enter because a balanced price range, a BPR is a really good fair value gap. It's much better than an order block fair value gap, whatever. I really like to use it. And if we have this context, this buy model, we have an SMT inside premium discount, we have low resistance liquidity being built up right there, and we have a sweep, we have a displacement backup, we've got presented a nice entry, then yeah, I just hold it towards the, I think, 4 standard deviation of this manipulation move. So a really good trade also because it was aligning with, it was below the true day open, below the true open, below the true micro session open, so that's favorable for longs, right? And if you look on the 5-minute time frame and look at the New York session, this was a really clear AMDX or XAMD. It really doesn't matter in this point because you can say that this, if we delete this, you can say that this is a continuation of the previous one. So now you would say this is an XAM, because here's a manipulation, and then D, right? Or you can say this is an AMDX. It actually, in both ways, it can make sense, and that's just gonna give you a lot of confidence that this is gonna be the next draw, right? Especially because we have an SMT right there, displacement, fair value gap get respected, sweep, displacement below all these true opens, the target being this low resistance liquidity. So we are bullish on the higher time frame. Everything looked good, right? So this was my week. If we go on to the journal I have, you see that I started off with a big loss on Monday, literally just not following risk management. I was just risking $500 for nothing, for just a bad trade. Then little loss on Tuesday, and then I started making some profits again on Wednesday, Thursday, and Friday. Why is that? Because I am using low size, really low risk, only $50 per trade. And you see what happens then, right? I'm gonna take better setups, better trades, gonna be more patient, gonna be more disciplined, and you see the results right there, right? So yes, I may be only up, I think $500-600 on my Finite account, but I don't really care because I learned so much more. I may be down on the week, but I learned so much more this week, and I'm so happy because I'm just building my skills every week over and over again. And yeah, we're just learning. And this skill, it won't just disappear out of nowhere, right? We just keep on building experience, keep on building this knowledge, and yeah, building myself actually, because trading, it actually builds yourself as a person. So yeah, I just built a lot of conviction this week, and I'm just not gonna be focused on passing challenge anymore. I'm gonna be focused on a good track record. Of course, you want to pass the challenge, but it should not be my main focus looking for setups, right? So yeah, I hope you learned anything from my week, from my lessons this week. And if you have any questions about my journey or my trading system, just ask down below. I'll be happy to help you out. And yeah, we're just gonna keep on building. Remember, trust the process. We're gonna get there. Week 17. Let's go to week 18. I'll see you guys next week. Peace out.